The bank that controls all banks. The birth of a financial powerhouse. For decades, Americans feared bank failures. The Panic of 1907 exposed the instability of the financial system, leading to secretive discussions among the nation's wealthiest bankers. In 1910, powerful figures, including Senator Nelson Aldrich, met in secret on Jekyll Island to draft a plan for a centralized banking system. Despite public opposition to centralized financial power, the Federal Reserve Act passed in 1913, creating the Federal Reserve, an institution unlike any other. While it appears as a government agency, it operates independently, with private banks owning shares in the system and receiving guaranteed profits. The mechanics of control. The Federal Reserve controls the economy through two main levers. Interest rates, raising or lowering borrowing costs to influence economic activity. Lender of last resort, providing emergency liquidity to banks in crisis. However, history shows that the Fed's decisions have often exacerbated crises instead of preventing them. Crises and failures. The Great Depression, 1929 to 1939, instead of stabilizing the economy, the Fed tightened credit, deepening the downturn. Bretton Woods and the rise of the dollar, 1944, the U.S. dollar became the world's reserve currency, backed by gold. Nixon ends the gold standard, 1971, the dollar became a fiat currency, reliant on trust rather than tangible assets. The 1970s oil crisis and stagflation, the Fed struggled to manage inflation, leading to extreme interest rate hikes under Paul Volcker. The 2008 financial crisis, fueled by reckless speculation and deregulation, the crisis resulted in $2.5 trillion in bailouts, enriching Wall Street while leaving ordinary Americans behind. Unchecked power. Despite its vast influence, the Federal Reserve operates with minimal oversight. Its meetings are closed, and even Congress has little power to regulate it. Critics argue that the Fed serves the interests of elite bankers rather than the American public, contributing to wealth inequality and the erosion of the dollar's value. A fragile future. The global dominance of the U.S. dollar is now being challenged by countries like China, Russia, and BRICS nations, seeking alternatives to the Fed-controlled financial system. With inflation and economic uncertainty rising, many question whether the Federal Reserve still deserves the trust it demands. Who watches the watchers? The Federal Reserve was created to stabilize the economy, yet its track record suggests otherwise. More than a century later, one question remains: is it truly serving the people, or just the financial elite?